This is the dollar yen on the 15-minute time frame, and I'm now involved in a very nice looking low and tight flag pattern. So this is one of the classic breakout patterns that we teach within the educational material here at Free Forex Education. What I'm going to do is, as usual, we're going to delete the information off and we're going to do the higher time frame analysis. And that analysis for me starts on the daily time frame. So there isn't too much here, but what we're going to do is we're just going to draw out the trend. We had a move lower, a pullback, a move lower, a pullback, a move lower, and then here we did actually violate the wrong way. We saw a small move lower, back up to this level just here, and then boom, we came lower, a pullback, we came lower, and then we have now rallied quite significantly into this level of structure. Now for me, we haven't actually reached the top of it, so I do believe there is room for the market to come higher. But right now, if we just take a look at what's happening, we've rolled off this level. We put in a lower low, lower close candle yesterday, and we're kind of testing this internal structure level on the dailies. Now as we drop down the time frames, we go to the 240, we get a better look at what structure is, what price action is doing against structure. So we'll delete everything off again. And just here we had a move higher, a pullback, a move higher, a pullback, a move higher. And then just here you can see this level here physically broke and closed below this level of internal structure. We then came higher again, and well, we actually came up to this point. And then we've been working our way lower. Now quite importantly here, this is a key level of structure for me. So if I put a structure level on there, you'll notice price action over the past few hours, we've actually put in a break below, close below, or a lower low, lower close. This is an indication that we could be seeing the market come lower because we've violated that level of structure. And the next level of structure for me personally is this one right here. So there is room for the market to come lower. So let's go and take a look at the 60. So we're building a picture now of the way price is moving. Now, if you have been through the educational material, you'll notice that I do say time and time again that when we get these breakout patterns, we typically see more than one in a row. It is an indication that we're starting to enter trend or very directional movement. And right here you can see we did have a low and tight flag that broke out. A very nice winning trade. What happened is it broke to the downside. We saw a pullback, and once again, boom, we have now broken to the downside. And again, looks like we are putting in a second low and tight flag. So it doesn't happen all the time, but typically we do tend to see these breakout patterns where there's more than one. This pattern for me is valid on the 15, and I actually used this lower low, lower close red candle. And again, as per the educational material, we need 4 touches for this to be valid. So 1, 2, 3, 4. I can only get involved when we've tested the closes of the candles up here, and I see a red candle, which is an indication that the market isn't just holding that structure level, but is physically coming the other way. And of course, I do only take these if we're in trend or if we've just violated a major level of structure. And as you can see, we're trending very nicely here. Move lower, another breakout pattern, move lower, pull back, move lower, pull back. So classic setup. There's very high probability, up to around 80% win rate this type of breakout pattern has. Now it's an 80% win rate on average for the highest quality trades. When we get to double top, these are a little bit less, but my targets are always that 127, and if we just look left, then we can see that target is above the level of structure where I would expect price to go to. But my testing is based on that 127. So let's just bring back on the orders. Stop here has gone just 6 pips above the high. I typically go just 5 above these, but because it's quite late, it's 7:30 in the evening, and the 10 o'clock changeover will mean that there's a higher fee to pay, and I don't want to be stopped out as a result of that. So the risk on this trade is just 14 pips, and I'm playing 2 pips in front of that 127 Fibonacci extension, and so the reward on this trade is 27, giving me pretty much a 2-to-1 risk to reward with a very high probability trade. And as you can see, we're starting to see a bit of a rally here, just gone 4 pips up in the last couple of minutes.